On this episode of Coins and Convos, we kick off season 2 with a proper catch-up on what we've been up to since season 1, the wins, the lessons, and the economy-induced character development.
From there, we get into savings and how one everyday money habit helped inspire one of Nigeria's biggest consumer fintech brands.
Then we enter the 10-year conversation. PiggyVest, Paystack, and Flutterwave. 3 major fintech companies, 3 different journeys, and one big question: what did they get right?
We also unpack why payment companies are acquiring microfinance bank licenses and what that means for settlement, deposits, lending, and customer trust.
So if you care about African startups or why your favorite payment companies are starting to look like banks, this episode is for you.
Welcome to season 2 of Coins and Combos.
Let's get into it.
What's good, hustlers and dreamers? Welcome to the Coins and Convos podcast, the show where startup drama meets real talk.
I'm Books, here to spill the tea on who got funded and what businesses are making big moves.
And I'm Ella, your go-to for the behind-the-scenes scoop into the startup world.
So buckle up, folks.
Grab your coffee, your water, your juice, or whatever it is you drink.
Settle in and let's get into Coins and Convos.
Ready to roll?
Plug in. Hello, folks. Welcome back to Coins and Convos podcast.
Welcome.
And FYI, this is season 2, episode 1.
Oh my god, it's second season.
Did you guys notice what I did there? Like, this is like our second season. Oh my god, I'm shy.
No, it's really great that we've actually been able to start a second season.
Right, and we're going heavy this season.
Yeah, there's so much to be like excited for. Before we get into it, we thought we should just do like a bit of introductions, for our new listeners.
For our new listeners, okay, I think that's good. Hi everyone, hi folks. My name is Bukola Adeshokon, but you can call me Books. It's easier to just say Books. And I am one half of the Coins and Convos podcast duo.
Dynamic duo.
I knew you were going to get excited about that. So for all listeners, you might remember from the last season that I had just moved from being like a general tech consultant into an in-house role at a fintech company. So before now, my work sat heavily around AI governance, data protection, startup and business advisory, from founders, scaling, all those things, all those funding bits I can't remember so much of anymore.
You remember.
And at the side, I also had some work on digital rights with NGOs and stuff like that, regulatory research and all. So but now I'm seeing things from a different lens point. I am now like in the ecosystem at the fintech end, and now seeing how these things actually play in practical sense. So basically seeing how money moves, seeing the risk that comes with it, seeing how hard it is to actually get a license in-house, and even when you're dealing with external consultants, seeing how regulators drag us. You just see, it's just a lot sometimes, but it's interesting. I'm learning a lot on chargeback disputes, on refunds, reversals, transaction settlement timelines. So many interesting things that I've been seeing. I don't know if it's so interesting, to be fair, but because it's tiring. Interesting. No, it's actually tiring because it's like a repetitive workflow, right? Except something new comes up or want to get a license in a new region or country. I'm like, oh yeah, something to look out for. So
with repetition, it leads to mastery. So it might seem boring, but what you're doing your thing.
Yes. And then so for like the funding bits also, I'm seeing new sides, like because my company works around raising money from commercial paper programs, and that's like interesting to just see how everything is like different from what I'm used to. So it's interesting to see, that's pretty much it. It's different now. I feel like I'm responsible if something goes wrong. Before I was just giving you advice, and if you take it, that's on you. If you don't take it, that's really on you. But now it's like when we get a letter from regulator, they're like, oh, where's legal? Send to the, and they're like, Bukola, this letter just came out. I'm like, what am I supposed to do? The first time it happened, I was like, oh my god, what am I supposed to do? And
I mean, this is your problem to fix now.
Everybody was looking at me that they're here. What are we going to do? I'm like,
you're asking me?
Like, do I even know what I'm going to have for dinner? And so it's just really interesting. And again, because it's not limited to Nigeria. It's like, a global regulatory framework that I'm working with now. It's just, interesting. But I miss my former job, because I didn't have so much responsibilities in terms of obligations.
You're not gonna miss it. You're gonna love this one. You're gonna love this one.
But yeah, Ella.
Yeah. So to introduce myself, my name is Emanuela Keshiro.
Kesh for short. No, Ella Kesh. Ella Kesh.
Anyway, but you can just call me Ella. I describe myself as a venture lawyer, basically. I advise.
Do you know how cool that sounds? Say it again.
I'm a venture lawyer. Oh my God, please.
I'm a tech lawyer.
So when I say venture law, I essentially just advise startups and the investors that back them on like fundraising, financing transactions. This could be from like institutional investors, angel investors. I advise on the deals and essentially what it means to, bring capital into the company. Outside of that, I also do general legal advisory for like tech startups. So that's like IP protection, enforcement, do data protection, regulatory compliance, licensing, things like that. Just general, normal legal advisory stuff. But I would say like my core, the bone of my bone, flesh of my flesh is venture finance. Is venture capital, is VC, is corporate finance.
You took me away there.
And I think books, you're kind of aware of like my growing interest in finance, like corporate finance, apart from like the legal advisory part of it, but understanding like the analysis that goes into like investment deals, how VCs make their decisions and things like that. And I've been doing like some studying with that, trying to, get some base knowledge with that, and just exploring opportunities within that space. So that's something that I'm really excited about, and I feel like I'm going to be talking about that a lot this season. So you guys just get ready for your finance, Ella. You're going to be getting the finance.
We're speaking from, but I don't like that we're both now speaking from like finance points, because I'm now
you're speaking from like
you're speaking from the investment side.
You're speaking from like
don't
the
you think
product
it's
side.
Finance, like where's the fun?
There's a lot. See, there's a lot of
oh God.
Don't put us in a box. You never know. And you know how it is with this work. Anything can come up. I just had a conversation with you about a debt recovery transaction. So things will be like very diverse.
It'll be interesting and dynamic. Yeah. Okay. No worries. Okay.
But also we know that in the finance space, or essentially the tech space in Africa, finance is what's fintech. Finance is what is dominating. Yeah. So
annoyingly, yes.
There's no way we'll talk about tech without finance.
Anyway. I love that. Right. So I forgot to add that last year my loss, because you asked about my wins, and did you ask about my loss?
Your wins, like your highs and your lows.
My highs and my lows. So I forgot to add that my lows were around Nigeria's economy. The economy, I don't know, we're still there now. We have
not left. I think we're even sinking further deeper.
But the funny thing is that in terms of like global scale, it seems like we're doing so well. And because I don't have much understanding on how the economic part of things work, I can't really speak to it. But it seems like we're doing so well in Africa as a nation. And because we're already used to a very low threshold in terms of, payments and all of that, it just seems like they're taking us far. But when you compare to other, because I was watching this lady's vlogs. I don't know if you know her, Ebiade. She's like, she cycles around Africa.
Yeah.
She's been cycling around Africa. And then she was giving an analysis about how comparing different countries' expense rates and which is the cheapest and most expensive.
So is it less expensive to live in Lagos than other African countries?
Yes.
It is?
Yes. West African countries. Limited to West African countries. She was like, the cheapest was actually Nigeria. When she compared...
How long ago was this?
This was like last week.
I'm very surprised, because when I'm thinking West African countries and I'm looking at Francophone countries around us, the CFA is now stronger than the Naira.
But it seems like their countries, it's more expensive to live there.
Okay, you're talking about like
it's not the strength of the currency now.
It's like the expense level
of in the country, basically. And it seemed like Nigeria is like the cheapest. And then if you speak
did she speak to it in terms of ratio, like when you ratio it with earning capacity?
That's one bit
like how much people earn, poverty levels, and stuff like that. For her to
say that it's cheaper, I think she should have already compared, the minimum wage, for instance, and just their general
never
living
know.
expectations. Because she was speaking with like, she was like, she's so
Very
sure.
like with
She was so, she balance currencies and how she's spending and how everything is going, and she's just like,
I do think that on like a global scale, there are countries that it's definitely more expensive. I know they are seriously complaining about like the expenses in Kenya and in certain like
funny
large
how
cities in
Business
Africa.
Insider, I think, posted, I think last week, when they were doing like a table of countries with the highest blah blah blah. I didn't really pay attention to what the header was, but because 3 weeks ago they complained about Kenya, but last week I saw that Kenya was not even on the table of the top 10. What's going on exactly?
We need to like research what it is that makes these cities expensive. Is it in terms of like earning capacity? Is it in terms of
and
like
how do they come
cost?
up with all these statistics that when you're saying, oh, this country is better, this country is, how do they
there's usually a metric.
So
it's either they say in
do you
terms
understand
of
the operation, like how they calculate it when they put the metrics together? What are
it
the metrics?
depends. It could be GDP, it could be earning
what
capacity.
I want to understand.
It could be it depends on the metric. If
It's
we're
just
saying in terms of strength of the currency against like the top currency, that's one metric. Another metric could be the GDP per capita, like per head. How much is each citizen earning in terms of like the global,
like the minimum wage?
Exactly. How much of their minimum wage goes to like
expenses,
like, how much can it fund their life? Then there's also considering that someone that doesn't live there probably is a visitor, a foreigner coming in, is spending a limited time. Yes, they know.
So you think that maybe analysis is not exactly right,
or it might be more expensive. It could be less expensive. You never know.
But what about all these statistics that they always put out about
like poverty,
cheapest African countries, poverty level, yada yada.
You have to check the citations.
You actually never see Nigeria in recent times. You don't see Nigeria listed like in top 10.
I do see it listed in one of the most corrupt countries.
Poor economy, high poverty level.
But I mean, it goes without saying that living has become very difficult in the country in terms of like the economy and how much like spare income Nigerians have. I don't even think we have spare income. We are all just trying to survive here. My savings is saving me. There's nothing like emergency funds. Like there's actually nothing like that. You can have emergency fund, but the emergency is gonna come tomorrow. So you get what I mean? It's just like really it gets to a point where it's like really gets really difficult.
So we can just say that this economy is giving everybody character development.
I'm telling you.
Yeah, like you're seeing different versions of yourself. Like, oh wow, so I could make do with this amount. Oh, really?
Like, do you understand? You begin to, and it's really frustrating because you're like looking at how much you've spent and you're looking at what you spent it on, and it doesn't feel like you're like, wait, but I just got food. Like I just paid my electricity bill.
Like
that's what I did. I got fuel. I didn't do like I wasn't like extravagant. I didn't book a trip. I didn't go out to a luxury restaurant.
And that's
I'm doing exactly.
My salary can cover, the things I used to cover before. I used to have like excess, but now it's like, where's the money?
Where's the money? There's not.
I was speaking to someone. I was like, I don't think I have any savings anymore. Like it's really terrible.
Did you ever use Ekolo? So, for people that don't have context, Ekolo is like just a piggy bank. We just call it Ekolo.
So like wooden savings box.
Basically,
that's like
bank.
the original fintech.
I'm telling you,
whatever piggy bank is doing now, they're learning.
That was the original number one fintech. And the reason I asked is because if you had a Kolo, I want to know how quickly you broke that Kolo between last year and now. Because the people that still have it intact, they haven't broken it. Like, I'm really wondering, is that you are really earning at a very high level, or like your discipline is really, really high? But yes, that was the original like piggy bank.
You know how that you would be saving money in Kolo and you think that you already have like 80,000 naira in it, for instance. And when you shake it, you'll be like, this sounds like 80k.
So
then you just break it now and you just see 13,500 naira and
you're like, oh my god, but it's not so
damage.
Full. Exactly.
It's just a lot, Sha.
But do you know that's essentially like it was conversations like that
that bettered PiggyVest,
and certain
that tweet thing. I haven't seen the tweet, but when they're telling their story about how PiggyVest came into existence, it was something around the fact that a woman tweeted about her savings and stuff like that, and then the founders picked it up into a conversation, and then that's how PiggyVest came into existence.
It's like that for like almost every problem that is being solved by like the top guys in our like fintech space today.
No, I don't agree with you, Ella. On that point, I do agree.
Money Points knew what they were doing.
Money Points, not everybody. Yes. Some of them just woke up and started doing all these fintechs for you know what.
But not the top dogs. I'm talking about our 10-year-olds. So essentially, we have a bunch of 10-year-olds in Nigeria.
Oh yeah, Piggy's 10 years now.
Oh, and Paystack is 10.
Oh yeah,
Flutterwave is 10 also. So those are our big dogs.
Oh, that's so cool.
And a lot of people were tweeting at the time. They were like, all these people started in 2015. What was in the air in 2015? And it's true, is a real question. I think, what innovation is essentially, everybody knows, is solving like general problems that we know exist. I think Money Point was solving a problem they knew was, for the unbanked people.
And their own focus was actually on the unbanked. Yeah, that's true.
And it got them to the point that they are today. Flutterwave, they were, what they were doing? They were trying to do the whole payments thing.
Making their payments easier, like payment gateways and all of that.
And Paystack as well.
And Piazza. And
let's come back in 7 years' time. Piazza is 3 now.
Piazza is doing so well for just how many years?
They are doing fantastic.
2023 till now.
Basically, we know that certain apps. I have so many. I can talk about so many. There's so many people. There's Piazza. There's Rainest. There's Grey. There's
Remember when you told me you were all about Timon?
Timon. I actually really do love Timon. Yeah. But when I speak about these things, it's because they are literally solving a problem that has been a headache.
Oh my God. Ella can speak for 1 hour if we let her speak about it.
I really do like this product. It's a travel solution, girl. Imagine not having to worry about moving currencies when you travel. You have a physical card. You can convert to local countries and withdraw cash and get money. They even have an eSIM function. So
Ella,
if I want,
you speak about me like this. Do you speak passionately about me? Like when they ask tell me about
my
books.
Career. You're not my job. You're not my career, you're not my job. I'm passionate about my job and my work. It's my job to know about these solutions. I advise these kind of companies, so it's my job to know about these solutions. Yes. And I really, really do like some of these solutions. And like I was saying, each one of them is actually solving like a pain point. And I just really hope that, with time, we have more 10-year-olds, more 20-year-olds, and, more people in the Flutterwave and Paystack brackets that are doing amazing things.
And Piazza.
Yeah. Girl.
And funny thing is that 10 years in African tech is like 50 years in like normal startup or business, because every year something new. I'm not even kidding. Like every week something new is coming up.
Many times it's regulators.
You see that all these fintechs are operating in different capacity and spaces, and then they have like affiliates or subsidiaries because they are doing so many things to bring the money together and have enough liquid to finance and all their operations, because it's actually not what goes in back end is like a different game entirely. And there's not so much profit or earnings from NGX transactions in the real sense of things. True. Most of the money comes from MPGS and all of that, but I mean, we're not having that conversation today. What would you say in one word, what would you say is like one common factor amongst the 3 10-year-olds that was pointed out? That's like Piggy, Flutterwave and Paystack.
I think they're all in the finance space.
One.
And let me not say Piggy, but Flutter and Paystack, now they all want to be banks.
They all want to be banks because they just acquired MFBs.
Why? So at first I was like, why are they getting? I understood from a regulatory point of view why they were getting, banking licenses. I knew their structure originally was essentially partnering with licensed banks, because most of their solutions were essentially, they were processing in the billions of naira, like millions of transactions daily, and they were never like in custody of those funds, and they had to deal with the fact that if there was any incapacity or issue with the processing bank, it affects their service. So I think what the goal was is to be in full control of the entire service, to be able to, give that confidence that, we're holding the money. Do you get what I mean?
Yes.
Do you want to give context to the people that don't understand?
Also, just to give a bit of explainer to how money moves.
Yeah.
I'm still trying to understand it.
Girl, you know what you're talking about.
But so I'm just gonna give an example with skincare because I'm on a skincare journey, by the way.
Okay.
Okay. But so imagine that you sell skincare online, and say that we have a BD Skincare Cosmetics whatever limited, and then you want your customers. Okay, so you sell a product to your customer, and your customer pays you like 20,000 naira through like a payment link. In your mind, you're like, the customer has paid, so the money should just enter your account automatically, right? But behind the scenes, they're like how the money passes through different players, because there are different players in the game, right?
Yeah.
So it moves from, say, the customer's bank, then it moves to the payment processor,
which is your switch, whether your InterSwitch or your Flutterwave, or if you're checking out, or your Paystack, or your Payasa. Sorry.
Don't
so
even
sorry.
try me. Or your pay. Don't mention any other name of Payasa.
I'm so sorry.
I'm moving on. And then there's the switching infrastructure, and then the settlement bank. Sometimes it's even like a partner bank and stuff like that. So, it's a lot of technical layers and compliance layers, and it's just too much. There's like so I was talking to someone one time about like my early days of trying to understand these financial transactions and fintech process, and it was like he sat down to analyze how money moves, and he feels that, because the other time people were complaining that, why are they charging 100k for transaction fee, and I was like, think about the way the money moves and how much you have to pay.
How much you have to give to
you're not
the
paying
processor. You're paying the bank that's holding the funds. You're paying the recipient banks. Exactly.
By the time I split that 100 naira through these different players, how much do you think I'm going to earn from it? So that's why we say that NGX transactions don't bring as much money as you would want them to bring. That's why most of these fintech players actually rely on MPGS transactions.
Do you know what I think is also in the pipeline, or something that they are thinking of doing? So if you notice earlier in the year, me and you were talking about how there's a lot of acquisitions. So Mono was acquired by Flutterwave, and then they also did their MFB application. Was it Paystack that applied the ladder, or was it Flutterwave? I've forgotten which of them did, but they applied microfinance banks. And I've been looking at it, and I realized that there is a gap in the, should I say, small loans sector. We have the branch and those ones that give small loans, right? But
is that what
when I'm
called?
saying but I'm talking about like bank loans. Bank loans don't
Heavy
service
loans.
those kinds of loans, and those people, I wouldn't say that they have access to like open banking. And I think it was, when I think of it generally, I think Paystack thought with the Mono acquisition, thought about it like, with the data they've gathered across the years for the past 10 years, they already know user behaviors, they know how they earn, their earning capacity and all of that. And with access to Mono and the open banking, it makes it easier for them to be able to give loans with the assurance that's I mean like not bank loans. Obviously there's a certain caliber of people that banks, less collateral, and because they have access to their information because of with Mono, I think something that is coming in the near future is most of these people offering loans.
Fancy announcements.
Yes.
But what we've seen from again speaking is like, I think what bothered me the most, what I was just thinking about the most, and I've not really given it too much thought actually, is that Paystack acquired it, so it's not like a standalone MFB. It's not like directly affiliated.
They even changed the name to Paystack MFB. So
do you think that that's like a problem, or do you think it's not really a problem?
I think,
because I feel like everything should just stand separately. So if problem hits one of them, it's like,
but then it goes back to the commercials, because the truth is, this business is a business and they need to make money. And if
instead of making it like a holding, it's like an affiliate kind of thing, and like operations are standing on its own separate. But now if you say, Paystack MFB, but I get again that people,
it's just the name, it's just the brand name.
I get again that people also want to be able to build trust in their customers.
Exactly. So the customer knows that your money is I'm transferring your money, but it's also being held by me. So I can
still
vouch.
have a transaction limit.
Yes, they do, and that's why they're not getting like commercial banking licenses. The reason is they are unable to control certain errors that emanate from their banking partners.
Their financial partners, yeah.
And if, for example, if Flutterwave is claiming 100% success rate on their or a 99% success rate, and there's an issue with their partner bank, how can they really give that reassurance if they don't have that control? I don't know if they process millions and they're not holding the funds. Also, the reason I think about the loan thing, obviously MFBs are authorized to give loans.
Yeah.
And they can hold customer funds, which was something that they couldn't do before. So I think, yes, there's the whole aspect of keeping things separate. In terms of the corporate structuring, you don't know what their corporate structuring, you don't know if they have it separate, if they have separate boards and all of that. You don't know. Actually, you know that there's governance requirements for microfinance banks and how the board should be. So that regulatory they're good. I just think that it has to do with, one, giving their customers assurance that your money, if I'm giving you 100% success rate, I'm in control of where your money is going to, where your money is being held, one. And also, I think they have something in the pipeline to start providing loans to people. That's just a hunch. It's just a hunch, I'm saying. Actually, because it feels kind of like coordinated. It's like they can see where the arc is going and they just want to be ahead of it.
I think I actually agree with you. I think I'm aligned with that, to be fair. And it just makes more sense. Lending and working capital is like easier for them because now they have visibility into cash flow, and like you said, they have data that can support merchants. They've been doing this
lending, for 10 plus years. They know their
and all of that.
They know their users' behaviors, their financial abilities. They have this data, so they can use it to make wise lending decisions that
there was a report that Paystack also gave, and I mean, we're not saying that that's the same thing that Flutterwave is also thinking about, but just saying that the acquisition would help them with their deposit structure and then lending services, which is, it just makes them serve their merchants better, right? Which is, really, really good. So I think if we're going to just say top of our heads to think of a number of reasons why this MFB makes sense to them in some way, we could say, like we said already from the get-go, trust.
Yeah.
And another one would be something around the lines of settlement control, because now they have control over deposit control, also deposit customer funds, all of that is in their, now they have better margins. So the whole high volume and low margin and all of those things, they can have better to control the time of transaction, because that's one thing that we also have in the payment space. Settlement timelines.
It's moving from this to this to this,
and then it makes it long. You don't know who is causing delay. You don't know where the problem is coming from.
Exactly. I love this insight that you have now, and it's because you're at your current company.
But like, when you make a transfer and it doesn't go through, you're just like, it's my bank. Sometimes it's not your bank. It's like the switching infrastructure. It's like I like that OP. I think OP has that feature. When you make a transfer and it doesn't go through, they'll tell you the reason why. They're like, the receiving bank is this. Or it's really cool. I think all fintech should have that. I'm just saying.
I do think so too.
And then there's the lending and working capital, which is like the biggest crux of what the biggest reason why they've maybe gotten this MFB you spotted, right? At least Paystack has openly said that that's one of the things that made them go through with the acquisition. And then there's like a deeper merchant relationship, also from the trust. There's product expansion, which every fintech,
you have to do that.
Yes,
you have to
every
keep
year
growing.
you have to have something to say that we
they are still
this year.
Coming for commercial banking license. Just give it time. Maybe when they mark 15.
But what then
or
happens
20?
to the guys that have been operating a very long time? I think we've had this conversation before. I don't know if you remember in last season.
Yeah, I
how
do.
Commercial banks need to start digitizing their processes, in the most flexible way, not about sending money and all that, but like other operations that regular fintechs provide now. Like, do you understand? I think that would be really nice.
Yeah.
Because most commercial banks now use fintech rails to service their. So if they can come around a way, but do they want to pay? Is the problem. Do they have the liquid to put into the whole thing?
The truth is that my interest is not in conventional commercial banks. If they decide to make improvements, great, but the reason why these fintechs exist is because they're solving for the gaps that those commercial banks are not able to provide. So we can only just hope that they keep doing and building better for us. And
I mean, I think this was a very interesting conversation.
I do think so too.
And what a wonderful way to kickstart
this season. This
this
new
season.
season. All right. Bye guys for now.